Hello, fellow traders. 'Tis I, the rumpled one. It is December the 14th, a Friday, year 2018. Let's talk trading. Weekly wrap up. Friday means we're going to wrap up the week. So, let's make sure you wrap up the week by using your money and risk management for each and every trade. Euro yen on the month, you can see here we're now below that previous month's midpoint. Remember earlier this week, I think I mentioned how I like to trade the previous candle period's midpoint crossover. Well, right now it's 72 pips below the midpoint. So it actually got above the midpoint earlier by, let's see, the high of the month is 0.96, and the midpoint, I believe, is 0.81. So it's about 15 pips above. It was in the upper wick zone, and you can see that midpoint is closer to the previous candle's close, which is the bottom of the upper wick zone. So you can see price shot through that midpoint and came out of the wick zone. So when you look at the trade, you can say, hey, look, the previous candle's midpoint is in the upper wick. So any cross above that midpoint, we'd be looking to go long. Hopefully it'd come out the top of the wick zone. On the other hand, if it crosses below that midpoint, it's heading towards the bottom of the wick zone, so you'd want to be short. And you can see how that worked out. Now, you can call that a hairy hindsight trade or analysis if you like, but I told you about the previous midpoint before that trade happened. And looking here at the weekly, once again, you see price went above the upper wick zone by about 14 pips there on the week, came out of that wick zone. Right now it's 86 pips out of the zone. It's in the lower wick zone. I don't have the previous mid dots on this chart. And once again, for those of you just tuning in, if you look at the gap column here, you can see all the weekly gaps filled. And we got a big red candle here. It looks like we had one a couple of weeks ago, and we've got another one today. And you can see the range here is 102 pips on Euro Yen, a really anemic 23 on the dollar yen. Once again, showing one of the reasons why I switched pairs to trade based on frequency distribution. The range has just dried up. I wasn't looking at the average range. I was looking at the frequency distribution of the range. And you can see here we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 pairs over 100 pips. And the pound New Zealand, aka the new beast, is clocking in at 197 pips of range, high minus low. The buy zone, we had the pivot point just below the open, but above the short zone. So it really wasn't a negative bias, or not much of one. There was really only a couple pips to make trading from open to pivot, and so it really was kind of it's a non-signal. But you can see here, buy zone, there was a trigger, a second trigger, and a third trigger, but these were pretty much scratch trades. But the short That should have been a scratch on that second hit. Here you go. Right here, it came back. That should have been a scratch. Right here, that would have tested your stop, but not triggered. Your stop would have been triggered here, but then if you got back short, you were paid handsomely that hour. Now we've got a VWAP sitting here at 128.63. We're 56 pips below it. For the rest of the day, you might want to trade towards the VWAP because usually price winds up heading back that direction. And we have a future pivot point right now at 128.41. Rats, you can see here as price is dropping, so is the upper portion of the lower rat zone. So green rats, get ready. And once again, we did take out the pivot in a big way. We're approaching S3, which is the 128.00. You can see here we've broken through a bunch of wicks, a whole bunch. And once again, price failed to take out the 129.70. That one just might hold, but we'll have to wait and see. And this one was just set up here. Once again, 3-ball at the top, red here. That was a 10 pipper right there. 1 ball at the bottom, that was a 10, 20 pipper the next hour. Or if you popped in here, that was a 10, 20, 30 pipper over 2 hours. 1 ball at the top, pro trade. Shorting here at 128.90 would have paid off huge. Now we've got a 3-ball at the bottom, so we'll be looking to go long at the close of this hour, either around 128.10 or 128.20, depending on the close this hour. That is a Larry live trade. And once again, just trading candle color at the line. The wick zones, price in and out of the wick zone, shot out of that lower wick zone big time. You can see here, this candle went into the upper wick zone, out of it, into the lower wick zone, and then out the bottom. Once again, holo trade, we had the highest open was here, price went up, came right down through it, which was, I believe that's the daily open right there. And you can see what happened. It put in a lowest open, came out, handful of pips, back in, back out, back in, and you can see we've got about 11 minutes left this hour. So we'll most likely put in a new low. It might even test the 128.00. Inventory retracement bars. You see here the short trigger, nice payoff. We had another short trigger here at 20, another nice little payoff. We have a long trigger put in here. My favorite one of my favorite trading screens. Once again, candle color at the line, looking at the previous daily, weekly, monthly, open, high, and low. You know, good trading is so repetitious, and I know some of these videos are very repetitive in the sense that we're looking at the same pair every day. For some people, that's boring. We're looking at the same trading screens every day. For some people, that's boring, but we're not looking to find something new. We're just looking to find something that works and that we can use to be profitable. Not about excitement like Vegas, even though it is kind of exciting to watch price just keep going in your direction, especially, dozens of pips in an hour. And you can see here, we just had some buying kick in as the bid came across above the valley of the ask. And so you can see here, it's about almost 2 pips above that valley. Einstein line. Just simple stuff here. This is when I opened the chart this morning. You see we had a trigger there, which would result in a loss, but then it's made it up and then some. Now, one of the things is if you take a loss off an Einstein trade, then a lot of times, if you make it back real quick, sometimes it's smart just to take it so you basically get back to where you were and then you can start fresh again. If it keeps moving in your direction, yeah, you ride it. But if you see there's some hesitation here, we got about what, a 2 pip oscillation here, then you can see, once again, waiting, waiting, waiting. So that's how you would trade the Einstein line. Now, we talked about the wicks here. You can see you have to go back 134 hours to find, and that's right here. You can see price was down there and flew up, and just so you know, that is the 2017 dynamic wick zone. Did a lot of work back then on wick zones. I think it was 2014. Was it 2014? I don't remember. Because some people ask, yeah, 2014, I did some work on wicks, and I did some more work on wicks back in 2017. It just proved to be very profitable. I was looking to see if there was more ways to milk the wicks. Once again, I was mentioning the frequency distribution, but normally I look for trade selection. I look at the daily range. So you can see here, the range is 100 or more, 42% of the time. So it's going to be 90, a little over 50%, 52. So it add another 18. That's 70% of the time. It's going to be over 80, and almost 80% of the time it's going to be over 70. About 90% of the time, the range is going to be over 60 pips.